Welcome back. The countdown is on and just about an hour to go before the finance minister presents the union budget in Parliament. And now we've discussed markets, we've discussed, of course, the global backdrop, we've discussed the big macro numbers. Let's boil it down to what really matters for you and me, which is taxation. That's what we're discussing with our next panel. And we have our experts joining in, Mr. Dinesh Kanabar of Dhruva Advisors, Mukesh Butani of BMR Legal, and we have with us Sunil Badala of KPMG. Gentlemen, thank you so much for joining in. I've been bothering, most of you for the last several weeks, going back and forth on this rate and that and manufacturing companies and, the new nature of the act, etc. But let's open with the big, bold question. Do you expect the finance minister to really deliver a bonanza for the middle class? Mr. Kanabar, if I could start with you.
Just one question before we answer that is that we are told that in the same session, or maybe today itself, we are going to see a draft income tax code, a new law coming in. So what's going to be in that draft act and what's going to be in the budget is going to be an interesting play, because you cannot have all the changes coming in the finance bill or the budget and then say that there is going to be a bill which is also going to deliver something which is radically different or radically new. So it'll be interesting play to watch out there. But I do expect that in this
Mr. Kanabar, just for the sake of clarity on this, and I'm glad you raised this point, because what she announced in July was a review of the Act, the Income Tax Act of 1961. And then there was the Direct Tax Code, which was, formulated many years back, and then it kind of went into cold storage. So how does it play out? And from what I've gathered with conversations with all of you all is that the review of the Act is unlikely to touch the tax rates. That's going to be more on reducing litigation, simplified language, removing redundant provisions. But the code has to deal with the rates, right? So if we have to talk about an income tax cut, how does it all come together?
That's right. And the rates come in year on year. And I,
Absolutely.
On your channel, always wondered as to why do we need to tinker with the rates year and year. In fact, one simple proposition which I have always canvassed is that cannot the threshold limit beyond which you need to pay taxes be tied into an inflation index itself. But leaving that aside, given the fact that what the finance minister has been saying, what the prime minister has been saying about doing something for the lower and the middle class, I am indeed expecting both an increase in the threshold limit for taxation, and I'm expecting lower rates of tax going all the way, probably up to 15 lakhs of rupees. And I think that will be something very, very welcome. Again, I am expecting all of these to be under the new regime and not the old regime, because that's what the government wants to do, to push people to the new regime, with which I totally agree.
All right, gentlemen, good morning. Thank you very much. Prashant this side. There is suddenly this sharp focus which has been, which is shining on, which is this difference between what corporates pay as taxes and what individuals pay as taxes, right? It's become now, of course, with it's very stark. It's been stark for a while, but there is a lot of focus now on all of this. So, Mr. Butani, I just wanted, is there any way this can be? Will the government try to reduce this? I'm not sure if the corporate tax rate from 25 should go up, but on the individual side, can we see some changes to bring it lower?
I don't see why there should be alignment of corporate and individual tax rates. If you're going to tax businesses at higher rates of tax and not moderate rates of tax, you're making it anti-business. The whole philosophy behind taxing individuals at the higher maximum marginal rate of tax is to look at the redistribution of income. That's the fundamental economic policy. Yes, at one point in time, the thinking was no matter what form of business you have, you should be taxed equally. But that is all in the passé. So I think that businesses should be taxed moderately. Individuals also should be taxed moderately, particularly in a country such as India. Otherwise, it gives opportunities for tax evasion or people having an outflight of capital or they themselves leaving the country. Okay. So I think the whole notion of having high corporate tax rates is, in my view, not the correct way to look at it. I think what needs to be looked into is what are the businesses that needs to be incentivized? And do you use tax rates for incentivization?
Yep.
For example, you had low rates on manufacturing that propelled manufacturing. Now that did not get extended, which came as a downer for many businesses. But if you ask me today, the corporate tax rates of 25% are still on the higher side. There is opportunity to look at India being more competitive and bring it down, if not to 20%, then at least to 22%.
Well, Mukesh, your point is taken, but that's not how you sell it to voters. And the middle class is today very vocal. You should see the number of memes. I'm sure you've got enough of them in terms
You
of
can sell
taxes.
it.
So, I mean,
You can sell that proposition to voters because the voters are also comprising of small and medium enterprises. It's not just about a debate on what should be or what ought to be the corporate tax rate. You know, most of our businesses in India are run by partnerships and LLPs and private companies. I don't see any reason why this class of voters should be subjected to an unreasonable or a high rate of corporate tax.
okay. As you speak, the finance minister now is entering Parliament building. So we are just counting down. It's less than an hour now for the budget. Sunil, your thoughts, I mean, in terms of encouragement for manufacturing, that 15%, of course, was a big ask and its extension, but we didn't get it last time. Anything in terms of encouraging FDI for that matter, for the gift city, through the gift city? What are the corporate sector's expectations?
So so I think first of all, let me just say that I agree with what Mr. Kanabar and Mr. Butani said. In terms of the expectations for the Aam Aadmi as well as for the manufacturing company, I think this is a big ask. Everybody is expecting that 15% concessional rate for the manufacturing should come in this budget. I also think that it's not just for the new manufacturing companies, but even for the existing companies, we should look at, let's say, some kind of an investment allowance or some incentive if they want to expand their existing manufacturing facilities, which we used to have decades ago, where, let's say, if I invested into the new facilities or I expanded the existing facilities, in addition to the depreciation, I would actually get some kind of an additional deduction of about 15%. Now, something similar can be looked at, in my view. Also, in order to encourage, let's say, R&D expenses or, startup, innovation, etc.,
Sure.
some kind of a weightage, deduction should be considered. Now, coming back to the, FDI, FPI issues, etc., I think, looking at the volatility in the market, I think there is two expectations.
Right.
One is the capital gains tax rates. I know that there was a complete change in the regime, but I think people are expecting or people believe that the tax rates for both long term and short term are little on a higher side. So maybe we should have some reduction there. Also, the STT, looking at the buoyancy in the collection of the STT and the capital gains, maybe there is some expectation that some kind of a rate reduction in the STT should
Got
be
it.
considered.
Well, if they decide to roll back a bit on long-term and short-term capital gains, then we'll have a working Sunday as well. It'll be a huge headline. I don't know if that comes true or not. But, gentlemen, thank you for this sort of a quick take. We do have to take a break because the finance minister has now proceeded to enter Parliament. But we will come back to you as those announcements start trickling in.